Well, good morning. Welcome, everyone. Thank you for attending today's meeting. I'm David Cooney, Associate Commissioner for Life and Health at the Maryland Insurance Administration. The purpose of today's meeting is to solicit public comments on the mandated study of professional employee organizations, also known as PEOs, that is required by House Bill 827, Senate Bill 829 from the 2024 legislative session. Before we get into the meat of the discussion, I'd like to start by introducing the other MIA staff members who are here with me today. First up is Mary Quay, Associate Commissioner for Market Regulation and Professional Licensing. We have Brad Bobin, our Chief Actuary. Jamie Sexton, who oversees all the MIA's legislative and regulatory policy issues. Riley Williams, our Assistant Director of Legislative and Regulatory Policy. Matt Weiss, who is also on our policy team. And then finally, Craig Guy, our Chief of Communications and Public Engagement, who will be providing tech support for the webinar. I'd also like to take a moment to go over a few procedures that we will be following today. When it is time for public comments, we will call first on members of the public who are registered to speak in advance. To the extent that time and technology permit, the MIA will then hear from unregistered participants who access the Zoom webinar platform. If you join the meeting through the public link, you can communicate with us through the chat function at any time. The MIA will continue to keep the record open until Friday, August 9th for additional written comments. The video of today's meeting, as well as all written testimony submitted, will be posted on the MIA's website. To help ensure excellent sound quality throughout the meeting, we ask that you please stay on mute unless you are speaking. Also, anytime before speaking, if you could restate your name and organization clearly, that would be a great help. So now, for a bit of background, a PEO is a type of co-employment arrangement where the PEO entity may perform various human resources functions, such as payroll and benefits administration, on behalf of a business. The arrangement is intended to be a way for employers, and especially small employers, to gain economies of scale and potentially offer additional benefit options to employees that the business may not have otherwise offered. While PEOs may lawfully offer their services to Maryland employers, what makes Maryland an outlier in the PEO section is that longstanding state laws prohibit a small employer from counting the employees of the PEO when determining group size for the purposes of purchasing health insurance. This means that health insurance products purchased by a small employer using the services of a PEO must comply with Maryland benefit and rating rules for the small group insurance market rather than large group health insurance. The Maryland General Assembly has historically been very protective of the small employer health insurance market in Maryland. And these laws were originally enacted to address concerns that allowing small employers to purchase large group insurance through a PEO would draw healthier than average employers out of the small group market and then drive up rates for the remaining pool members. In recent years, when various bills were introduced to allow small employers to purchase large group insurance through a PEO, the General Assembly responded by revising Maryland law to further strengthen the prohibition on this practice. However, some stakeholders have questioned whether there's any evidence or data to either support or refute the concerns that PEOs may have a negative impact on the rate pool for the small employer market. Consequently, the bill passed by the legislature this year requires the MIA to study PEOs and report its findings back to the General Assembly. Today, we will be accepting comments on any of the parameters of the legislative study, which include identifying and comparing the regulation of PEOs under federal law and state law in other states, reviewing the history of PEO activities in the state of Maryland and elsewhere, along with changes to the PEO industry over time, reviewing PEO health plans and benefit designs, reviewing requirements that businesses must meet to participate in PEO arrangements and access health plans, examining the regulatory structures for health insurance and PEOs in other states and under federal law that allow individuals who are co-employed through a PEO arrangement and have a workplace employer that is a small employer to participate in the PEO's large group health plan. And finally, addressing any potential impacts of proposed statutory changes in the state relating to the offering of health coverage by PEOs on the small group market. So I believe we had 8 individuals who registered to speak in advance, but I'm not sure if all 8 were able to attend today. We will give each person an opportunity to speak and provide any comments they would like to share. I did want to start by recognizing any elected officials on the call. I don't see any in the panelists right now, but I believe There may be someone from Senator Klausmeyer's office and Senator Beidel's office. So if you would like to have a moment to just introduce yourself, we can move you over to the panelists. If you just drop a note in chat, we'll keep an eye on that. But I thank you for joining. And Craig, if you could keep monitoring the chat for me, I appreciate that. Thank you. So while we're waiting there, let's go ahead and start off with Bryson Poppin, who is representing the National Association of Benefits Insurance Professionals. And Bryson, I believe you're going to introduce Kevin O'Toole to us this morning. Bryson, you're on mute.
That's correct, Commissioner Cooney. Thank you, and good morning to you and your colleagues. I am here representing NABIP Maryland, which many of you may remember as the Maryland Association of Health Underwriters, and they have been active, that organization, for many years in Annapolis with a principal focus on the small group market. With me today, and appearing at my request, is Kevin O'Toole. Kevin is a member of NABIP. He is also our subject matter expert. He is going to speak directly to the intersection and interaction of PEOs with the provision of health insurance to small businesses. My role, very briefly, is to provide some historical perspective on the small group market for those assembled today. And I'll be very quick in doing so, Commissioner. It started in 1993 with the passage of House Bill 1359, when the current small group structure was reformed and placed in a setting where there were very few underwriting factors. They, in fact, became rating factors only. And one of the important policy decisions made by the General Assembly, which, as you noted, Commissioner Cooney, has continued to this day, is the restriction, the prohibition, I should say, on what we call medical underwriting, or use of health status in determining eligibility for coverage in the small group market. That reform was very successful, and I think it continues to be successful to this day. I believe we peaked back in the mid-90s with about 500,000 participants in that market. I believe we're about half that today, but it's still a critical mass that's very important to serve this population of small businesses who wish to provide health benefits to their employees. And that particular provision is essential. You're going to hear more about that from Mr. O'Toole and others. In the mid-90s, efforts began in Annapolis to carve out exemptions from the requirements of the small group law. Association plan legislation was introduced. PEOs made their first appearance, as I recall, back in the mid-90s. And generally speaking, what these groups tried to do was to eliminate the prohibition on using health status as an underwriting factor. They were not successful. And again, as you correctly pointed out, the Maryland General Assembly actually clarified the law to ensure that any organization that was sponsoring a health benefit plan would have to abide by the basic structure for small group health reform that was originally enacted in 1993 and became effective in 1994. The concern of our clients today, we are what legislators typically refer to as the brokers, and there are several hundred members of our association. There are literally thousands of licensed insurance producers who participate in the health insurance market generally in Maryland. And we are concerned for our clients. We want to be sure that there is a safe harbor for them, and the small group market is a safe harbor for them. This is not intended in any way, and my remarks should not be construed as a criticism of PEOs. From what I understand about them, and frankly, it's not very much, but from what I understand about them, they provide valuable services to small businesses in many different areas. But carving out an exception to the laws that have served us so well for so long must be examined very carefully, because, again, we want to protect that safe harbor for small businesses who choose to avail themselves of it. So with that, Commissioner Cooney, I'd like to turn my remarks over to Mr. O'Toole with your permission.
Yes, absolutely. Thank you.
Okay.
Thanks, Bryson. Good morning, everybody. Again, my name is Kevin O'Toole. In my professional life, I'm a broker with TriBridge Partners. I also sit on the NABIP board, as Bryson mentioned, and just wanted to speak a little bit on really a few of our principal concerns regarding this proposed legislation. I think most importantly, as a few have mentioned previously, is our biggest concern is the degradation of the Maryland small group market through adverse selection. Simply put, if PEOs are able to enter into the under 50 marketplace as they operate today, many times they do underwrite out bad risk. So if they only take healthy groups out of Maryland small group, that could leave the potential for a great deal of adverse selection, driving rates higher and making healthcare less accessible to Marylanders as an end result. So that would be our principal concern. Tied to that is, where is the line drawn? If we're going to allow PEOs to essentially aggregate groups for the purpose of ensuring or securing better healthcare rates at a large scale. I think we're going to return to the 90s where, brokers like myself may look to get an exception for a consortium or a captive or any other type of collective purchasing agreement. And that would only further exacerbate the adverse selection potential for Maryland small group. If those floodgates were to open, I think there would need to be a line drawn at some point in the legislation. And then, with that as well, I would say our tertiary concern would be there are a lot of different PEOs out there, hundreds. Some of them are certified, some of them are not, but they all do operate in different ways. Some are very flexible, allowing, groups and brokers in other states to carve out healthcare, to carve out property and casualty insurance, and they really just want the tech side of the PEO. Others do not allow carve outs. So one of the questions we would have is, what would the legislation put in place in terms of allowing PEOs to carve in or carve out the healthcare piece if this were to go through and pass?
All right, thank you, Mr. O'Toole. And I do have a question, but before I get to that, I did just want to take a second to recognize, I see the Honorable Catherine Klausmeier has joined us. She's our state senator representing District 8. So Senator Klausmeier, it's definitely an honor to have you here with us today. I just wanted to give you an opportunity if you have any remarks you'd like to make before we continue with the discussion.
I thank you all very much for having this. I think it's very enlightening as to how it goes to the legislation, but not only that, as I think Bryson said, as his conversation went, we got to be very, very careful. And the same with Kevin, we have to be very, very careful that we do it the right way. And by these conversations, I think will really help that situation. So it's been in place, the small market group market since the 1990s. And that's sometimes hard to unravel, but if we work hard, we can fix it and make it work for this group. So thank you.
Okay, thank you, Senator.
Thanks for having me.
Absolutely. And Mr. O'Toole, a question I have, and I think I'll likely ask this of all the panelists, just one thing that we have been hearing more recently from proponents of allowing PEOs to be used to purchase large group insurance is the comment that Maryland is an outlier nationally with this issue, and that I've heard anywhere from Maryland being the only one to there being up to 3 other states that have the same position as Maryland. But essentially, what we've heard is that most other states do allow small employers to aggregate to purchase large group health insurance through PEOs. So my question is, are you aware of any unique aspects of the Maryland market in particular where we think there would be greater concerns for adverse impacts in Maryland that may be different from what other states have experienced?
Sure. So, I mean, I'll preface this by saying, we enjoy a good working relationship with many PEOs, both in Maryland, and we work in DC and Virginia as well, both in the under 50 and over 50 space. And there's certainly a place for them in the market. I think what makes Maryland unique is the fact that we do have the Maryland small group market. Other states don't have something similar to that. So those groups in the smaller, what we would consider small group are rated individually as it is. So the potential, risk there is, leaving the unhealthy groups who aren't, healthy enough to get into a PEO or another collective purchasing arrangement, like a captive consortium, et cetera, in this market where they can't get out of it. They don't have any other options, but they can't get into the collective purchasing either. That would be my response.
All right, thank you. And before we move on, are there any questions from any other MIA staff members? Okay, Mr. Arrington, Glenn, I see you have your hand up. Would you like to speak?
Yes, I would just like to concur with Kevin that I'm licensed in 9 states. And yes, I'm involved with PEOs, which I'll present my findings once I have a chance to speak. But I agree with the fact that that's the major difference, is the fact that we do have a guaranteed issue product that's available, unlike the other states.
All right, thank you.
If I could just intercede, under the ACA, all the small group markets and all the states have a guaranteed issue product that is rated, similarly to Maryland. So, I'll say Maryland got a head start with MSCR, but there are the same rating rules under the ACA.
All right, let's see who we have next. Getting next up, I have Caitlin McDonough from Harris Jones and Malone, who is also the Government Affairs Counsel for the National Association of Professional Employer Organizations, or NAPIO. Caitlin, it looks like Kristen Baldwin, who had also registered to speak on behalf of NAPIO. I don't see that she was able to attend, so I believe you'll be speaking.
Yeah, they subbed me in, so I appreciate it. Thank you, Commissioner, and thank you to the rest of the MIA staff for the opportunity to provide comments today on the PEO study. As David said, my name is Caitlin McDonough with Harris Jones and Malone. I'm here today representing the National Association of Professional Employer Organizations, also known as NAPIO, which is the largest trade association for the PEO industry. NAPIO is the voice of the PEO industry, and PEOs are champions for their small business clients and their employees. I'm repeating a little bit what David noted in his introduction, but PEOs provide human resource services to small and mid-sized businesses. We issue wages and remit taxes. We offer workers' compensation and risk consulting services, and provide compliance assistance with employment-related rules and regulations. PEOs help businesses take care of their employees by enabling them to offer robust benefits at an affordable cost and provide access to experienced HR professionals. We help small and mid-sized businesses save time by taking administrative and HR-related tasks off their plates, which allows them to focus on the success and growth of their core business. We also help ensure that the state of Maryland receives the appropriate payroll and unemployment insurance taxes, and that worksite employees entitled to worker compensation receive those benefits. With the rise in remote work, employees are located across the country, therefore requiring employers to comply with diverse and often complicated employment laws. Small and mid-sized businesses are partnering with PEOs to ensure that they have proper compliance across multiple jurisdictions. Based on our latest membership information, more than 3,000 Maryland businesses employing more than 28,000 individuals partner with a PEO. And across the United States, PEOs provide services to 200,000 small and mid-sized businesses employing 4.5 million people. Again, as David said, currently Maryland is one of 3 outlier states that do not permit PEOs to offer fully insured large group health benefits to worksite employees if the client employer is considered a small employer under state law. This places Marylanders at a disadvantage compared to their peers across the country who can access quality, affordable healthcare benefits through their employer. Thank you for allowing me to provide testimony today. We are, pledged to continue to work with MIA and the General Assembly to, to find a solution here. And we hope that you continue to utilize NAPIO as a resource in the completion of this study and any further work on this matter. Thank you.
Thank you, Ms. McDonough. Are there any questions for Caitlin from any MIA staff members? Bryson, do you want to speak?
Thank you. This question is not for Caitlin, but it's delayed processing for me. Mr. Bobin's comment a couple of minutes ago about the other states having a guaranteed issue in small group. I think that's correct, but I believe, and I would defer to my colleague, Mr. O'Toole here, but I believe the issue here is not what other state small group laws is. It's that they permit businesses to participate in large group, which permits some kinds of practices, such as one known as lasering, which is removing persons from eligibility. So I've really reached the limit of my knowledge on this, but I don't want the question that was hanging in the air that Mr. Bobin raised to divert us from what I understand is potentially happening in the Maryland market if this legislative policy change were made. So I just want to try to clarify that if I can.
Right, thank you, Bryson. And Glenn, I see you have your hand up again.
Yes, I appreciate it. I would just like to comment that because the Maryland small group went into effect in July of 1994, we had a very stable small group prior to 2014, where small group does have guaranteed issues. So we had approximately 500,000 insured lives, which when I go to speak and present myself, and that's dwindled down to about 250,000 lives currently. So the pressure is what the concern is to sustain competitive premiums in the small group market in Maryland. But when I get a chance to speak, I'll talk more about that.
Sure. Thank you, Glenn. Mary, you have a comment, question?
Yes. Ms. McDonough, you commented that Maryland is one of 3 states that don't allow fully insured PEOs. And what about self-insured PEOs? Because my understanding is that the Department of Labor considers PEOs to be MEWAs. And I know Maryland also does not allow self-insured MEWAs in general. Do you happen to know that, or could you get that for us?
Yes, I can absolutely get that information. And we appreciate the way the MIA has kind of set up this meeting with the subsequent comment period through the 9th. So we plan to take any questions back today and fully address those in our written comments to be submitted to the full group by the 9th. So thank you, Mary, for the question, and we'll be sure to address it.
Thank you. Any other questions for Caitlin before we move on? Okay, well, Mr. Harrington, I think we'll go to you now. So Glenn, you are president of Groups Benefit Strategies. If you'd just like to take a second to introduce yourself and go ahead with your comments.
Sure. Thank you very much. And thank to all that are on the call today. First, I want to say thanks for holding this hearing so that the public and brokers can actually voice their opinion. My name is Glenn Harrington. I'm the principal agent and owner of Group Benefit Strategies, LLC, in the heart of Bel Air, Maryland, in Harford County. I started my health and life insurance career with Mamsie Optimum Choice in July of 1994, when Maryland went through the healthcare reform bill, providing guaranteed issue policies to small groups in Maryland, 2 to 50 employees, in July of 1994. I've been an independent agency owner for 20 years, representing 250 small employers, 15 large employers, 350 individuals, and 200 Medicare individuals in Maryland. I sit on the board of NAIFA Maryland, NABIB, Harford County Chamber of Commerce Legislative Committee, Cecil County Government Relations Committee, and on the small group Maryland Health Connection Advisory Committee, and was on the small group work study bill that the previous year researching potential subsidies for small group companies. So I think I have a good grip on the industry of Maryland small group and its citizens in Maryland to have competitive health insurance options in Maryland. Additionally, my agency is a channel partner with several PEOs for large employers, 51 full-time equivalent employees, currently with some major payroll vendors. We can offer this total benefit human resource solution, commonly referred to as HRIS systems, for these larger organizations. Large employers can go through underwriting individually or these types of products with HRIS systems and PEOs. However, I do not feel it is a good solution for small employers. My major concern for this regulation change to offer PEOs and small group Maryland employees are as follows. Number one, competitive pricing. Small group guaranteed issue being able to sustain itself. And as I mentioned earlier, at one time, Maryland had 500,000 lives in the pool. It's already down to 250 lives. So my major concern is that the PEOs will be taking the healthy groups out of the pool, and PEOs underwrite the small employees, then place them in some cases in a fully insured, large co-employer comprehensive plan. So that is why they have control over the healthy small groups. Second point, transparency. The PEOs bundle many services into one total universal comprehensive plan, which includes payroll, health, dental, vision, disability, HR, workers' comp, risk management, safety, and compliance, all in one administrative price. So we as the broker do not have access to the cost of all these services separately. We receive an administrative fee, and we do not have access to the total cost of all those products. It's bundled as one. Third, quality of service. Once an agent refers a small group client to the PEO, the agent is not the broker of record with the insurance products. One broker controls the service of the account with the support of the major PEO vendor. The agent that referred the client must rely on the PEO partner that they referred them to service the client correctly with enrollment processes, claims issues, and just overall direct relationship with the carrier. Fourth point, unbundling the total package. In order to unbundle, it is exceedingly difficult to pull out pieces of the benefits and even know how much the premiums are compared to if you pull them out of a product individually. It is a complicated process to do once they are in the bundle of products. So in my opinion, as the owner and principal of Group Benefit Strategies, LLC, we are against PEOs and small group Maryland small business. And the last comment is my main goal is to protect the guaranteed issue small group market, 2 to 50 employees, so that they have competitive premiums to offer employees small group policies in Maryland. And I think that the PEOs would potentially jeopardize that market. Thank you for giving me the time to share my thoughts.
Thank you, Mr. Arrington. Does anyone from the MIA have any questions? Okay, we'll move on to Mimi Heiliger-Burrell, who is the manager for small business programs with the Maryland Health Benefit Exchange. Mimi, would you like to introduce yourself?
Yes, hi, thank you. My name is Mimi Heiliger-Burrell. I'm the Small Business Program Manager at Maryland Health Benefit Exchange. I also oversee the Small Business Program Advisory Committee that John Prank, who might be on this call, he co-chairs with me on that call. We have monthly meetings to discuss different topics that impact the small group market, such as in one of our meetings we did discuss PEOs, and I would like to offer MIA and anyone who would like to address that group, and that group consists of community advocates and folks who are in the insurance industry, such as brokers, TPAs, and so on. So I would like to offer that, but I would like to say, in addition to what others have said in this meeting, that there are serious implications to the competitive small group rates, as Glenn just mentioned, cherry picking of healthy groups from the small group market, and then We should also note that the ACA protections afforded to individuals in small groups, such as maternity care and maternal health services, may be impacted. And I think it's also important to look at this from a perspective of what benefits PEOs offer when they offer benefits to small groups. And it would be good to compare that with the existing small group plans. And to see whether these are cheaper plans for less coverage or about the same coverage. I think that would be a good comparative analysis that we should do. And then of impacted groups in Maryland, I believe the micro groups would be even more disadvantaged with higher rates that come out as a result of PEOs entering the market. And then typically in the group market, I believe that there are certain implications that can't be quantified, such as a group may join a PEO and not really know what they've bought until they try to access services, and then they find out those services are not covered. So it might be a little too late. So just my 2 cents there about that. And so that's it. Thank you all.
Great. Thank you, Mimi. And I'll just ask if you had any additional thoughts to the prior issue we were discussing about what may make Maryland unique, any factors we should consider, as compared to other states that already allow this. Do you have any additional thoughts there?
Yeah, I agreed with what Glenn said, that the market was already a robust small group market prior to 2014. And I think that might be one of the reasons, but I'll look into that as well. And that I'm glad this is an open forum, and we can come back with more analysis on that.
Thank you. I appreciate it. Does anyone else from the MIA have any questions for Mimi? Okay, let's go now to Brett Leininger from Kress Hammond Government Affairs, representing the National Association of Insurance and Financial Advisors.
Great. Thank you, Commissioner, and thank you, everybody. Brett Leininger, as David mentioned, with Kress Hammond Government Affairs on behalf of NAIFA Maryland. We have producers in all lines. A segment of our membership is in the health insurance space. We would just like to express some concerns. I think some have been stated, really based on transparency. PEOs, as has been mentioned before, bundle services, and businesses really have no way of knowing what they are paying for each item, kind of one bottom line price. So there may be a savings overall net. But the reason that's so important is what the value proposition that health producers and brokers bring to the table. They help these small businesses navigate a very complex arena of health insurance. And you all know the amount of time that folks at the MIA and everybody in this room, including Senator Klausmeier, how complex the issues are with respect to health insurance. So if you're running your business, you really have to rely on expertise of somebody, and the producer provides that expertise. They provide it at renewal to understand what the benefits are, what the pricing is, and all the nuances with respect to their specific issues. They provide that service throughout the contract. I have members within the NAIFA organization who are on the phone on a regular basis with the myriad of customers that they have dealing with very specific issues that need to be dealt with in a very timely basis and with the expertise. So that's one of the biggest value propositions that a producer brings to the table. Casting no dispersions on a PEO, just talking about the concerns. So when a PEO approaches a business, excuse me, as I mentioned, there's one bottom line price, so no way of knowing what they are paying for. if the business signs up with a PEO to include the health insurance and finds that service is lacking, it's difficult to peel off one component. So with that, pardon me, I have a frog in my throat today. Disclosure of pricing prior to signing with a PEO is paramount. I think as the senator can attest to, often the issues surrounding insurance are about disclosure and making sure the consumer knows what they're signing up for. Disclosure of contracting provisions as well. We've all entered into bundling arrangements, whether it be a cable bill or other, and they can be tricky. So it's a tone of caution. Make sure that we're really peeling the onion back on what is that experience going to be for the consumer, which is the business and ultimately the individuals who have health insurance through their employers. So with that, I really appreciate your the opportunity to speak, and we will follow up with some written comments that we'll be able to address your question, David, regarding Maryland's uniqueness. Thank you.
All right, thank you, Brett. Any MIA folks have any different questions for Brett? Okay, let's turn now to Clark Langeral, who is the president of Forecast Strategic Advisors.
Good morning, everyone. Thanks for the opportunity of speaking. I'm Clark Langeral. My company's Forecast Strategic Advisors, which is a do business as. Our underlying corp is Triumvirate Inc. We've been in existence since 1979. I entered the life and health business in 1975 and was involved in the first salvo of Maryland's small business health reform back in 1994. At that time, the emergence of the tech boom was beginning to gain some momentum. And we recognized that by virtue of that, most of those entities were all small, under 50. And also at the same time recognized that most of those entities had very core basic competencies, very laser focused. And one of the distractions was the mandatory and necessary employee benefits, which included health insurance, payroll, and HR, which are non-core to most small businesses, meaning that is not the focus of the business, but it comes along with the territory, so to speak. So we recognize right on very soon that in order for small businesses to be able to prosper and grow during their critical mass, meaning until they get to critical mass, which I would think is usually typically 50 and over, it made a lot of sense to, quote, outsource. Everyone in this call probably uses some form of outsourcing. And the law of large numbers has an advantage, as we all know. That's why Home Depot has wiped out many significant small local family-owned hardware stores, as a small example. We have mega banks, not small banks. Why? So one has to understand in the competitive landscape that things go through an evolution. For those of you on the call that aren't as old as I am, I have been involved in establishing a PEO. I actually created one in 1996 because I recognized that there was an advantage, as I have elucidated to earlier on. And in that conversation, I recognized that there was my fellow brothers and sisters that were insurance brokers went back to the Maryland legislature after the 94 legislation, arguing that the pool of small business insureds would be poisoned by the advent of PEOs. At that time, there was numerous testimony provided to the Maryland legislature of which one, as an example, demonstrated that Florida was the largest at that time provider of PEO solutions, which had been going on for more than 10 years, so from the mid-'80s. 1% of the total employee population of Florida was covered by PEOs. That was the largest state with the largest percentage of employers participating in PEOs. So the misnomer of poisoning the well by virtue of only the healthy risks will be cherry-picked, I think can potentially fall on deaf ears. But and again, I must say that looking in hindsight, the list-built brokers, which included at that time a handful of very large brokers, also managed to be able to convince what used to be 40+ insurance carriers in the state of Maryland offering underwritten and some guaranteed issue small health post 1994. Those small 4 very large vertical organizations had list bill TPA platforms. Today, those very same platforms have evolved into what you've heard mentioned here, unbundled services. Not only do they do the list bill for group health, group life, group disability, and health insurance, but they now offer payroll administration and HR. Thus, not a PEO, an unbundled vendor. So therefore, they have understood what the competitive landscape does, because many of those entities whose insurance brokers rely upon them wanted to be sure that there was a vertical offering of those ancillary non-core competency services to small businesses. So the evolution of PEOs, which are not virginal by any stretch of the imagination, they've got warts, but at the same time, it has evolved into a very efficient system. I no longer have my PEO. That was sold and spun off back in 1998. But my point is that brokers every year must sit down with their client. They've got to go over what the health insurance renewal is. That is a distraction. It's important, but it's a non-core competency that the small business owner has. So if that can be alleviated until that small business owner becomes large enough, they can graduate, and PEOs will testify, I'm sure. I can't swear to this, but would testify that a lot of times small employers, once they mature in size, graduate due to the complexities of their organization to bring in payroll, HR, employee benefits for the future. So there is a bridge in services, and that was the whole focus of my company, which was called Employers Plus. We even trademarked with the U.S. Trademark Office virtual employer organization, because we saw that virtual employee status, which brought to us by COVID-19, manifest itself. And remote work has now become an underbelly of our economy, and there's no looking back. So in some respects, PEOs aren't as clean as the driven snow, but what it does for all of us on this phone call is it demonstrates competition. Competition makes everybody honest, and competition brings in the opportunity to use the law of large numbers. So just my own personal experience is that we're involved in an evolution, and here it is 30 years later from the initial legislation, and we're revisiting the same thing, and the comments that I hear are deja vu all over again. Not good, not bad, but I hope that the legislative representatives are listening, because I think that there is some resonance to both sides of the argument, but that I would say that the future belongs to a competitive landscape, and let's let the market rule. Thank you for the time, and I'd be happy to answer any questions.
Thank you, Mr. Langgrove. Does anyone have any questions for Glenn? I mean, I'm sorry, Clark. Okay, well, I believe that was everyone who registered in advance to speak, but since we do have a little bit more time, we can now open it up to anyone else on the call who would like to provide comments. So if you're on the public link, but you would like to speak, if you could just identify yourself in chat, and then Craig can move you over as a panelist. So we'll wait a few moments to see if there's anyone else who'd like to speak.
David, Ari Wind is moving over to the panelist side.
Okay, great.
Thank you. Yeah, I had a couple of comments, right? And I think everything that everyone said was very, very helpful and useful. But, you know, one thing I want to stress is we didn't talk about the consumer, right? I mean, we touched on it a little bit with competition and other things, but the fact that the Maryland pool has shrunk from 500 to 250 tells you people are leaving the marketplace. You know, I should have said it first. I'm with a company, Benefit Mall. We're a general agency. We work in all 50 states, and I specifically have worked with many of the PEOs in probably about 30 different states. So I kind of know a lot about the evolution. And when you look at some of the markets 7 years ago, they felt the same way. They're going to ruin the risk pool. You know, they're not transparent, right? I've been here 24 years, and yes, I agree with what a lot of people used to think about PEO, but they've come a long way. And what they do is they help the employer, because dollars are very tough for small employers, and that's regardless of the state. This is a way of getting more affordable health care. It's a way of getting better plans potentially to fit the needs of each individual client, and bundling it. And when I say bundling, I don't mean bundling it from a perspective of pricing. It's giving them the resources they need on the HR side, the compliance side, payroll, a lot of things that, and technology, a lot of things that employer groups want. And they've become very broker friendly, I would say, over the last 4 or 5 years to really work together to help that consumer. And I know one of the concerns is, well, how does this affect the small risk pool? And yes, there's ways to control that it doesn't, but a PEO's profitability is very different than a typical insurance carrier, right? When you look at a typical, and I'll use large group as the example, and that's in a lot of states, most large group insurance companies look to be at a 75 to 85% medical loss ratio, right? Which means for every dollar they take in, they really only want to spend 75 to 85 cents on the dollar in claims. But in a PEO, they're willing to spend dollar for dollar premium and claims. So when you look at the disparity in rate, it just has to do with the PEO profitability, because in Maryland and other states as well, PEOs are there even without the medical piece, right? There's a lot of states that have, I'm going to say 20% penetration rates in PEO without having medical in there. And there's other states that have majority of it in their medical plan. So I think, you know, when you really dive deep into certain PEOs, and I don't want to speak for all 900 PEOs, I probably have vetted over 200 of them. I think it's very important to understand there's a handful to a dozen PEOs that really probably share the same vision as everybody on this call. Find a way to work together where you're managing the risk pool for Maryland and providing the valuable services. And I know, I don't remember who made that comment. You see so many more remote workers now that you have employees in multiple states, right? I work with companies that have employees in 20, 30 different states. All the work that they need from HR, compliance, leave administration, the need of benefits in different states with different carriers, right? Because, you know, you can look at, you know, the typical national carriers, Blue Cross, United, Cigna, Aetna. They don't always fit the need for all the employees that reside in other states, right? Certain carriers are, you know, have 85% market share in certain states. So this is a way of getting the consumer what they need, and there's a way to manage the risk. You know, and one last comment I do want to make when I heard bundled billing, that's a lot of PEOs used to bundle bill with no transparency. I could tell you, everybody that we've worked with, every PEO, the consumer knows, the client knows exactly what they're paying for their medical premiums, right? For each plan. They know what they're paying in taxes, they know what they're paying in workers' comp, and they know what they're paying in the admin fees. And those admin fees are typically where the PEOs profit, not from the medical.
Thank you, Mr. Nguyen. Do we have any questions? Okay, we can move on. Sandy Walters has now moved over as a panelist. Would you like to introduce yourself and make a few comments?
Sure. I'm Sandy Walters with Kelly Benefits. I've been an agent for about 50 years, so I have a lot of experience in this one. The one thing that hasn't been mentioned, I think, is I agree with a lot of the remarks that have already been made. My key thing is when somebody pulls out and goes into a PEO, if their experience runs bad, they can dump it back into the pool and get rid of that risk by having them insured through the pool, which eventually could lead to a death spiral within the pool. And that's what I'm worried about. PEOs do a lot of good things, but I'm not sure it helps in health insurance in that area. Thank you.
Thank you, Mr. Walters. Do you have any questions for Sandy? Bryson, go ahead.
Thank you, Commissioner. Just a follow-up comment to my longtime friend and colleague, Mr. Walters there. It is my understanding, I do not profess to be an expert in the practice of business practices of PEOs. However, it is my understanding that not only can there be let's say an adverse experience by the part of a small business that takes the health plan through a PEO, but they can engage, some of them can engage in a process that has been described to me as lasering, which is the removal of a single employee in an employee base. And that, of course, addresses both comments that Ari and Sandy just made about consumers. Our concern, NABE's concern, is about consumers. And one term that has been thrown a lot about on this call and is not found in the insurance article is cherry picking. And I would respectfully suggest to our colleagues at the MIA that not only should this study incorporate the small group eligibility laws and requirements, you should also look at the unfair trade practices title under the code to make sure that the PEO practices that you identify comply with those laws as well. So that's my comment, Commissioner.
All right, thank you, Bryson. Okay, I don't see that anyone else has asked to speak, but Senator Hausmeyer, yes.
Yeah, I just want to thank everyone on behalf of the Senate Finance Committee for bringing all sides to this whole situation. It sounds easy and well, I shouldn't say easy, but it just sounds like, for me, the way to go, because I'm from a very small home business. But there are hitches here and there and hiccups, and I hope we can work something out that it all works out. So we'll see how it goes. So thank you all for all of your input. It was very valuable. And the best part is, David, is it's online, so we can listen to it again, and which is really good. So thank you. And the best we can do is what we can do for our consumers. Thank you.
Yes, thank you, Senator. And I think with that, I just want to thank everyone for joining us today and give one final reminder that we will be accepting those written comments up through August 9th. And I hope everyone has a wonderful rest of the day. Thank you.
Thank you.
Thank you all.